Hello, hi. Well, thank you all for being here. First session on this stage, much appreciated. My name is Andrew Symes. I'm CEO and co-founder of a company called OXCCU, Ox for Oxford and CCU for using carbon capture and utilization. This is us on one slide. We're around 21 people now. We've raised £20 million. We are an IP-heavy focused company, and we're now on a path to produce economic SAF by the end of this decade. So, why do we exist and what's the purpose? Well, currently we make 0.1 billion litres of sustainable aviation fuel. And demand is going absolutely through the roof. People are wanting to fly more and more and more. There was a brief period during the pandemic where the demand went down very, very slightly, but it's absolutely shot up, and there's no let-up, essentially driven by Asia, but also Europe and the US. People are flying more and more and more, and people want to give the opportunity of flight to other countries and to future generations. People do not want to stop flying. In order to be able to do it sustainably, though, we've got to find a solution that essentially enables people to have the same experience that they want, but with lower emissions. The key to that is sustainable aviation fuel, the same fuel which enables us to have the same infrastructure, the same planes, the same airports, but now with a fuel that has lower emissions. Currently, we make it all from vegetable oil, 0.1 billion litres of it. Majority of it comes from China as used cooking oil, and it's then converted into aviation fuel. That is simply not going to be enough. That is the blue bit that you see at the bottom of that chart on the right. In order to scale aviation fuel, we now need to think about other feedstocks. We need to think about waste biomass, and we need to think about CO2. That's really where we have a significant amount of waste carbon that we can convert into aviation fuel. To do that, you need energy, you need hydrogen. If you have CO2, you need a lot of hydrogen. If you have biomass, you need less hydrogen, and that needs to come from green electricity. But the key message of this slide is this: we've got a huge challenge, but we can solve it. We've got to essentially get SAF to scale, and we've got to do that by adopting new technologies. There is now real demand for power to liquids being the CO2-derived SAF. You see, we've got these mandates now in law that are in the UK and the EU, and we're talking about very, very large volumes. We're talking around, starting small maybe in 2028, and 2030, but we're talking, particularly in the EU, around 28% of all SAF by 2050 coming from power to liquids. That's an enormous number, a huge number to scale up, and that's essentially CO2 and hydrogen. We've got big money going in as well. There's real interest on the back of the mandates being put in place, but there is a key challenge. The key challenge is cost. Power to liquid SAF is just too expensive. Currently, we're talking around 5, even up to 10 times more expensive than fossil fuel. There's two reasons for that. The first is that you've got a high capital cost because you've got multiple steps in order to make it. The second, and often the one that people focused on most, is the operating cost. In large part because of the energy that's needed to make the green hydrogen. But also, it's because the processes themselves have low selectivity. And this essentially means that you have a huge amount of byproducts that takes up the expense of hydrogen, and you're getting lower value products as well as your high value jet fuel. So the solution to this is reinventing the process to turn CO2 and hydrogen into fuel. And that's what we're doing in OXCCU. Our background is deeply in chemistry. My co-founder, Tianken Zhao, has worked in Fischer-Tropsch technology his whole career. Fischer-Tropsch was invented over 100 years ago. It was originally actually an iron-based catalyst that was scaled up. The world switched to cobalt-based ones around the 90s, early 2000s, because they're very active with CO and hydrogen. But the challenge with cobalt-based FT is that they don't work with CO2. So majority of routes that are now being looked at first convert carbon dioxide to carbon monoxide, and then essentially do the Fischer-Tropsch on carbon monoxide and hydrogen. That doesn't have to be the case, and that's what we're showing. You can actually feed CO2 and hydrogen directly to a Fischer-Tropsch catalyst. The key breakthrough, though, was to go back to iron. So actually go back to the catalysts that were invented over 100 years ago, but with a twist. The original iron-based FT catalysts, if you feed them with CO2 and hydrogen, and Sasol did this, actually just generally were expected to make only very light olefins, so ethylene, propylene, butylene. What Tiankin showed after 10 years of work at Oxford University, and it was the subject of the Nature paper that was published in 2020, was that you can actually get to the jet fuel range in a single step. So CO2 hydrogen being fed into an iron-based Fischer-Tropsch catalyst, and you can get jet fuel range hydrocarbons and water, always get a lot of water with power to liquids, out the other end. And so this now essentially simplifies this process. It crucially reduces the number of steps, so we've got less CapEx, and most importantly, it reduces the OpEx as well because we've now got a more selective process. We also have a simpler final step. So we make lighter products. We're making naphtha and jet fuel. We're not making diesel and wax. So you don't have to hydrocrack. You don't have to heat up your wax to essentially make the longer chains. Our post-processing step is actually much more similar to vegetable oil upgrading heifer, whereby you're removing oxygenates olefins and making more branched. But it's a simpler, more mild process. And this is a big advantage as well. The final advantage I will say is around heat management. So the iron FT is easier to manage from a heat perspective. We're at higher temperatures, which is helpful. We've got more water, essentially, produced. And also we've got CO2 in the feed, which actually helps in terms of heat management as well. So there's less heat to take out. The challenge with the one at the bottom is essentially you've got huge energy input for the reverse water gas shift, followed by a very, very exothermic reaction that's very difficult to control that has to be kept at very low temperatures for a lot of heat taken out. This is our pathway to scale. So we started, as I said, a long time ago with research back in Oxford University Chemistry Department. In 2023 was when we raised our Series A on the back of our own lab results, and that was where we showed essentially the same results that we had in that Nature paper, but in our own lab and in the shaped catalyst form, and that's really key. We showed over 2,500 hours of stable catalyst performance. After the Series A, we built our demonstration plant. That essentially produces 1 liter a day of fuel, and this is 1,000 times bigger than the lab. So we're talking about a massive scale-up compared to the lab to where we are essentially today. This year, we've raised our Series B. We're raising £20 million, and with that, we'll build a scaled-down version of our commercial plant. So essentially, we are using everything that we'll do in the commercial plant, and we're making the finished jet fuel, but essentially, we're doing that at a smaller scale, but we'll do that again in Oxford Airport. We plan then to do OX3, which is our commercial plant, and that will be towards the end of this decade. This was our Series A, so we've raised money from Keyco and Clean Energy Ventures, our 2 lead financial investors, but we've also got investment from Eni, Aramco, United Airlines, Trafigura, and Doral, and others. This is our demonstration plant. We delivered this in 15 months, from raising the Series A to getting this up and running, on time, on budget. We're very proud of this, and we'll do it again once we've raised the Series B. Finally, this is our purpose, really, which is all around de-risking our technology in order to get to scale. So essentially, what we are doing is essentially ticking off every single thing that a licensor is going to look at us and say, I think that's risky, I think that's risky. We're going to partner. We've got some of the best partners lined up in terms of reactor, in terms of proprietary equipment, so that we can get this technology package to market and essentially ensure that it's warrantable as soon as possible. Our business model is essentially licensing. We will control the catalyst. We will essentially sell the catalyst to the customer, but we will also sell the technology package, and that will include catalyst, but also reactor design, and we'll work with partners to ensure that this PtL technology package is essentially warrantable. The final thing to say is that we have opportunities in naphtha, so essentially we are looking to sell naphtha to steam crackers in Europe so they can decarbonize plastic production, and we also have applicability to biogas to SAF and also gasification to SAF. The reason is because our catalyst works well with CO2 and CO. So essentially, we can work with CO2 in the syngas, CO2-rich syngases, and we have less gas conditioning steps compared to traditional cobalt FT catalysts. So we've got a huge wide of applications for our catalyst. We're scaling fast. We're looking for partners. We're looking for investors. So please come and speak to me if you want to help us on our journey. Thank you very much.
Thank you very much, Andrew. Okay, let's continue. Thanks. Our next topic is activation of household device flexibility. Please welcome on stage Chris Bernkopf, CEO, founder and CEO of PtL. The stage is yours, Chris.
Thank you. Nice to meet you all. Slides will be up in just a moment. So I'll start with a quick raise of hands. Who here has a flexible device at home? Maybe a heat pump, electric vehicle, battery? Okay, that's actually quite many. Who of those do you think are steered intelligently, say optimized by PV production or something similar? Nice. And who here has heard of device flexibility trading? Great, then we still have some work to do. That's good. So yeah, what do? We're PtL. I'm Chris, the CEO and founder of PtL. We're a company headquartered in Vienna, and we do two things. We control devices, so basically we steer them according to power markets, and then we enable utilities to trade. And what does that look like? Of course, we work with companies like E.ON, Total, and essentially they use us to roll this out to their customers. So last week we launched with E.ON Sweden. You can see that as their app. Usually our software is integrated within their app, and you can see here we're controlling, for example, a heat pump, and so we optimize that device based on the power markets. Now, why do we partner with utilities? Of course, we could also be an installation company. We could optimize the manufacturing process. We could work with manufacturers directly. We could found our own utility, but we can, of course, also work with utilities directly. And so we believe that utilities have the scale, but also the market access to be the best partners on that journey. So why do utilities work with us? Of course, utilities, huge companies, they have many challenges. Of course, since they sell a commodity, they essentially have high customer acquisition costs, but also high customer retention costs. As you know, of course, the power markets fluctuate a lot, so it means it's quite tricky to know how much power to buy for a specific device, for a specific type of customer. And of course, there are challenges which increase their price. Now, next to that, they need to transform from an energy retailer to a tech company, and of course, that poses challenges as well. And so we basically help utilities on that journey. You probably have all heard of Octopus, Tibber, 1.5, and other companies that are challenging utilities now. And of course, that additional pressure forces them to innovate. So how do we solve those challenges? We have two products. One is called PtL Instant, and one is called PtL Advanced. So PtL Instant is a solution with which you can try out our device steering instantly. So essentially, we have a white label app. You can connect your device, and then we optimize cost. Now, PtL Advanced is once you've already been accustomed to the software. There we integrate with your own, as a utility app, with your trading department, with your customer support functions, to be able to generate the maximum of revenue. And I'll go into detail in the next slide. So this is our white label app. As you can see here, you can add a device, and then you can see all your devices here. And then we essentially start steering them according to the spot market and according to your own solar power production, should you have an inverter. So that means you save approximately 20–25% in energy costs. And of course, this is ready to go for utilities, so you just need a logo, a few colors, and then we're ready to start. But of course now, with that, the utilities don't actually make more money, the customer saves money, but the utility might actually lose money, because when we shift power from times here in red of high price to in green times of low price, we might actually cause imbalanced costs. So the utility actually might have more costs than they would usually have. And we solve that with PtL Advanced. So essentially, you can connect to our APIs, and then you can receive trading data. So that means, essentially, we send you the information how we're going to control devices. So we say, well, the fleet will run tomorrow at a certain time. Here, for example, the curve in red is, we say, well, we will turn on the device at the cheapest price. And then, of course, we try to follow that. That means we avoid the cost of the utility having purchased power at the wrong time, but of course also we reduce the purchasing cost of energy for that utility. Now we also trade on other markets, like the AFFR balancing energy market, and with that we generate additional revenues. So we can save utilities approximately 30% of their cost of purchasing energy, and of course they forward most of that cost to customers. And of course the utility can manage all of that in their console. So how exactly does it look like? When we do two things, right? We steer devices and we trade in the power markets. So here you can see our steering methods. So one, of course, is using more of your own solar power, and then two, controlling the device according to the spot price to use power at the cheapest times. Now that's available out of the box. And then, of course, for the trading part, so when we enable the utility to trade with our data, there we can trade on a spot day-ahead market, which is essentially the same steering method as here, but the utility can trade and actually make money from it. The intraday market, which is a shorter form of the day-ahead spot market, and then AFFR balancing energy for additional revenues. And all that comes out of the box with our APIs. I won't bother you about the benefits, but I'm very happy to answer any questions that you might have.